and the S&P up 3.5%. So we'll continue to watch that. And the volume there on the triple Qs. Thank you, Rick Ducat. Our market meetup panel is standing by. Alex Coffey and Joe Mazzola, head trading and derivative strategist at Charles Schwab. And a happy Monday to you both. Joe Mazzola, some of your thoughts on the action. What stands out to you thus far?
Yeah, I think Rick talked about the technology sector being strong today and kind of how that's leading the way. I think overall, if you look at the market, we're still a little bit more heavy on the decline side than the advance side, even though you see the overall market has kind of picked up. So it's not necessarily a broad follow through. It's a little bit more kind of directed towards technology, and as he mentioned, the flash and memory is kind of leading the way, and I think that's important. I think you want to see WTI get back below 110 and then start to push back down towards 100 for investors to feel a little bit more confident that the banter kind of going back and forth between the U.S. and Iran, that's a little bit more than just that. And we'll know more in the next day or so, barring another extension, whether or not there is some type of a ceasefire. But markets are holding up relatively well. We had a 3% rally last week, and I think one of the things that I'm kind of keying in on, Nicole and Alex, is just what we've seen on the institutional side, and that is a lot of that hedging activity that was really prevalent throughout the month of March. It started to dissipate a little bit. So some of that skew, some of the buying those downside puts, part of that did roll off just because of the end of the quarter. But we haven't seen the institutional side willing to pay up as much for some of that downside hedging. Maybe they're foreseeing that there's a relatively soon end to this conflict. But if nothing else, it shows you that maybe some of that volatility is contracting a bit.
All right. And Alex, some of your thoughts this morning. I know we're expecting some economic prints as well.
Yeah, building on both what Rick and Joe were talking about, the interesting thing about tech as sort of a sector broadly is, given the uncertainties, not only because of the geopolitical tensions, but this so-called SaaS-pocalypse and the AI build-outs, you've actually seen valuations for the sector plunge since the onset of the conflict about a month or a little bit over a month ago. And relative to the S&P 500 over the weekend, I was looking, I think that the premium that you'd be paying for the tech sector is the lowest it's been since like 2018 versus just the broad index, which is interesting. But there's an asterisk, right? It's believing in whether or not these forward earnings projections are accurately representing the actual path that these stocks are going to take, given the uncertainty in some of these software names
forward earnings.
Given the uncertainty, as one of your guests on previously said, around maybe class action lawsuits for some, for some of those bigger tech names, for example. Combine that with the data we're going to get this week, actually the data we're going to get in just over 5 minutes, the ISM services data. I think that's going to be a pretty critical number. It typically is each month. It's oftentimes overlooked until it comes out. But if there's some sort of surprise there, you could see a real market move. The last thing I'll say is 1 o'clock Eastern time, we're going to get a press conference from the White House. I think it's going to be a really important moment for this week and a really important moment for today.
Understood. Yeah, that is a big one. And also just the talk of the ceasefire efforts and some of the prospects that could be happening has brought a little bit of calm to the market this morning, but nobody knows which way it's going. I mean, we woke up and we said, oh, it's April 6th. And then you see that, that date was pushed back, maybe feel a little bit better. And then you saw stock futures not too far off the unchanged line. Joe, what else are you watching here?
Big week for inflation data, PCE. We also get CPI, and then we get GDP. So a lot of that data that's kind of that could show whether or not the economy has strengthened or at least is holding up through the tariffs and through the change in oil prices. We're starting to see some of that trickle in now, and then within the next 2 weeks, we'll start to get earnings. So, Alex mentioned the ISM. If you're going to look at that, absolutely pay attention to the prices paid component. That continues to ratchet up. And why do we have to pay attention to that? Because that's going to eventually lead into profit margins, which leads into earnings. And so, all of this data is important to follow this week, Nicole.
Yeah, and look, we also had a nice move here in Bitcoin today. It's up 3.7%.
There we go.
It's been hovering around close to 70. It's at 69, 640.
There we go. Let's
at
get some
this moment.
backward.
So lots to watch. Thank you both, Joe Mazzola, Alex Coffey. Thank you. Great to chat with you each Monday. And I'm glad you were with me today, folks. And I'll see you at 2 o'clock every day, 9 a.m. for opening bell and 2 o'clock for the watch list. So join me for the watch list. In the meantime,
I'm so angry that
thanks
they
for
have
being
to
with
wake.
me.
They
I'm
get to
Nicole
wake up
Petalini.
late.
The Dow is down 7. The
We have to
S&P
wake
is
up
up
fucking
16.
early as a
Morning
goddamn
Trade Live with
motherfucker.
Sam Bottas is next.
I don't want to play this too. I try to capitalize every week. Is
Schwab
Bitcoin
Bank
finally gonna
Investor
make a
Checking,
move this
the
week?
checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor
we move
Checking,
a dollar
you get
today?
the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money
It
safe.
doesn't matter.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real
And
time with
oh
speed,
my God, why is
accuracy,
everything
and
at the
precision.
move so
I think one of the
slow?
most important things is you're making a play
Everything
in a
always has to
risk-defined
move
way
so
here going into
so
earnings.
low.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Okie dokie.
Stay connected to what moves the markets. Download the Schwab Network app and
so
stream
easy to just
anytime
fall into
wherever
that.
you are.
It's a Mario. Luigi. It's a Mario. Company average ratio. Very close. It's close to being normally. It's gotta be 1 in the next.
Hello, happy Monday, everybody. Welcome to Morning Trade Live. I'm Sam Bottas, live from the floor of the New York Stock Exchange. We've got plenty to hit on, both here and abroad, over the next hour. Here is a look at what is coming up. We will dive into the current geopolitical risks to watch in the market with President Trump's profane threat to Iran on Truth Social over the weekend. And over the next hour, we will have example trades for Netflix and Alphabet. Netflix is moving higher this morning after an upgrade, and Alphabet is down 15% from February's all-time high. But for now, let's take a look at where markets are trading. Of course, kicking off a fresh trading week in the first full one for April, and we have got stocks higher this morning, so building on the gains we saw in the Thursday session as we approach the long weekend. Obviously, we are dealing with conflicting headlines this morning around the potential for a ceasefire, but it's okay. The S&P 500 managing to reclaim 6,600 now. Let's see how long it holds. Obviously, we are looking towards a press conference happening at the White House, 1 p.m. Eastern. The Nasdaq 100 is putting on 0.7% right now, so that is our leader on the session, certainly outperforming the Dow Jones, just fractionally higher, 54 points there. The Russell 2000
special placement, there's a certain amount.
Yeah. So risk on for our major averages as we kickstart things today, and of course we have got a lot of foreign markets out of action for Easter. So not much trading there, not much to work with this morning. But as far
we gotta start using our hints, but I'm pretty sure it's memor.
Right now, so just backing off a bit.
I think it's that word.
The Dixie right now at 99.62. We've got gold catching a bit of a bid for today. We're up 0.7%, 47.12 on the yellow metal. And even though, of course, we do have these headlines coming through, we continue to see oil, which is picking up a little bit here. We're at 111 on WTI. So oil continues to remain elevated, but we have got stocks continuing to climb higher in the face of that, which maybe suggests that investors are starting to get comfortable with these elevated prices. But of course, this has a lot to do with the fundamentals as well. We'll be starting to get earnings coming through in earnest next week. But Bitcoin catching a bid today, up 3.5%, knocking on the door once again of 70,000 on BTC. So
that didn't help much at all.
For trade this
I feel
week.
a little fucking gypped.
The market's first reaction to the data as well.
I think it's offering.
Yeah,
there we go.
We had the S&P
Investors and
PMI,
regulation D, private placements receive offering.
So
private placement, yeah, memorandum.
Because we do have the ISM services data for March being released as we speak. George, just walk us through what you're seeing
technology.
Yeah, I mean, if you look at the core numbers in terms of the ISM
written message in a business
PMI, the numbers actually came in slightly less than estimates. 54 was the print versus 54.8.
Cool.
That's a decline also compared to the previous month at 56.1. New orders actually was a bright spot. That number came in around 60.6 versus 56.8. Again, higher than last month's at 58.6.
Distributions
and the other thing
not.
is prices. Prices paid essentially from an ISM services standpoint was higher. This is to be expected considering what's going on with oil. At 70.7 versus 67, and that's higher by a meaningful amount from 63 last month. So across the board, a little bit shy on the total index, higher prices paid, nonetheless. Overall new orders seem to be improving, and that's again to be expected considering some of the inflationary aspects of what's going on right now. Inflation leads to higher prices as well as higher supplies.
Yeah, they have maximums. It's like 7. Well, they made it like 85 now.
The prices paid,
is it 8,500?
We want to see
nonetheless,
any
there's
evidence
a
of that
max.
pass through as far as input prices then becoming output prices, as far as what the consumer
But does a 401k have a contribution on it?
Shifting gears to what we've heard from Jamie Dimon as well. I'm just wondering, what stuck out to you. He talked about, obviously, speculative bubbles, AI, private
They do
credit,
not share the pre-tax. Haha.
What did you make of it?
Well, I think his comments were relatively balanced. I mean,
I really
he's
thought I had
addressing the geopolitical conflict, which, again, is going to exacerbate our inflation problem. The Fed is really constrained right now. Even the labor market last month, as reported on Friday, was actually quite good.
Fuck,
so with that said,
I thought that the Roth was the only one that was
derivative for inflation. That's what leads inflation. So that's going to be something the economy and, of course, policymakers have to contend with.
Alright, it's still early.
I think
still early. They wake up at 9. We wake up at 5 over here.
There were some challenges with transparency, but he was also not necessarily concerned of an outright, balance sheet, if you will, asset liability mismatch that could create, of course, a cascading effect in the financial sector. So it's worth watching, but not necessarily something he sees as problematic, at least right now. I think the other thing is the core issues still exist, trade and tariffs, as well as the aspects of AI. He really declare AI sort of a speculative investment, but he did talk about how we're starting to see the manifestation of winners and losers. So again, AI is revolutionary. We know this.
No additional
it is going to be embedded in our productive economy going forward.
You know that
it's
also too
again,
risky
some of the aspects of software, being consumed by artificial intelligence that's spilling over, of course, into the software aspects of private credit, which again are concerning. Even the software names today, for the most part, are trading either flat to down.
Right, and we know that obviously Jamie Dimon has been one of the more sort of high-profile, influential voices that has weighed in on private credit as well in recent years. I mean, particularly his comments around the cockroaches that really stuck out.
We're doing it. We're doing it. This is the first session. We're actually shooting to take the test at the end of this month.
As far as what we're dealing
You gotta
with
say things out loud, or else they never happen. So yeah, whether we're getting these right now, we got a little under 30 days to stop looking so new at this. But thanks for joining us. Every day it's gonna be a study sesh. I'm gonna change the description. It'll be like a study sesh. I guess people could just join the stream. I'll even have links, like video links, video ninja links, so you could even pop on here, show off what you're working on, or if you're working on the same thing, that'd be cool too. And then we could all take breaks, shoot the shit. You could try to make something out of it, make a community. All right, back at it.
Index right now looking at 9-day VIX at 24.6, 30-day VIX at 24.8.
Let's see if we could get on
so there's again
correct
slight
answer streak, and then
contango in the short term
we'll
to 30-day VIX.
The real
but those two numbers are quite elevated right now, especially the 9-day VIX up 13% with the regular VIX 30-day up 4%. So anything can happen. I just unfortunately don't have an answer for you in terms of what'll be the outcome.
Corporation would most
but
likely
crude oil
call
again, up about 1% today. It's coming off the pre-market highs, or even last night when the futures opened up, it was around 115. So we could certainly see another spike higher or some resolution. I think this is certainly a very tepid market. You have to be mindful of the volatility, and essentially just looking at the VIX itself. If you take the VIX and you divide it by a 16, it gives you an approximation of the daily moves, which again approximately is over 1.5%. So with that said, with volatility over 20, you just have to expect a lot of chop until there's some concrete resolution. So things can get better, but also things can certainly get worse based on what we've seen in the past 6 weeks or so.
Certainly been described as a paralyzing tug of war in these markets. On one side, you've got the talks of the ceasefire. On the other, you've got the Iranians obviously framing it very differently. You've got the threats and the counter threats as well. So, obviously this is why we're seeing this sort of choppiness in the markets this morning. But as we do see the VIX looking at levels of about 25 or so, we do have some pockets of strength within this market, though, George. I'm looking at some of the memory names higher. I mean, particularly a name like Seagate
just to free up, just to get rid of the contract and free up the stock. Consider when a company would want to stop paying the existing preferred dividend. And potentially,
well, yeah. So I mean, look, the majors. I mean, I know the usual suspect of the memory, and of course the storage manufacturers, Seagate, they're all higher. Western Digital, Micron, Intel, and AMD are higher because there's prospective CPU shortage. So that'd be mindful of that. But again, NVIDIA's
so the company's
right now.
credit
Microsoft
rating
is still in the
might.
In the software space, Broadcom to the downside.
If their credit rating went down, that means that
on a dime. But Google and Meta platforms to the upside. Netflix is stand out today
interest
based
rates
upon their
would
prices
go
that are higher.
down.
And of course,
People don't have to pay them that much, which means that they would want to take back whatever outstanding contracts they. Yeah, I think it's
kind of a mixed bag because Tesla
Fudge.
higher, the consumer discretionary names, and again, just a lot of dispersion in this market. So without concrete clarity, it's tough for trend traders. I'm a trend trader. So you have to sit on your hands and just wait for more clarity. But again, some of the semiconductor names
so it's what
are
they were
trading
just
very
talking
well right
about.
now, but others are not. Considering some of the majors like Broadcom and NVIDIA trading at the downside right now.
There's no incentive to call.
Yeah, and I think we're just waiting for the earnings to really kick off in earnest, so to give us a sense of some direction here as well, George, as you mentioned. And I know some of the memory names are trading higher as we approach Samsung's earnings in the next couple of days. So that's obviously going to be some event Everest to watch, something to keep an eye on. But really appreciate you giving
That's
us
the
across some of
Series
those top
7
stories, the
guru.
data
If you don't
and
know
what's
who
moving
Dean
those
is,
markets. George, appreciate
one
it.
of the
Coming up,
best
we will take a closer look at the
free
overall market
resources
impact
out here
of
for
the war
almost
in
anything
Iran. Jay
financial.
Pawlowski from TPW Advisory.
SIE
Morning Trade Live
and
back after
all
this.
the series. Dean and his buddy. Not R.I.P. Oh my goodness. I'm sorry. Shout out to the homie. I forgot his name, but he's also an incredibly nice man too. They're just out here trying to teach, drink, and smoke things and know things. Which statement is true regarding? They're very nice plans. If you care about your kids, yeah, 529. Fuck a Coverdale. I'm pretty sure A is a thing. I think it's, yeah, they gotta use it. Wow, we are trash this morning. Fuck, what is it? I mean, it's been a minute, but dang, you take a weekend and that. Okay, fuck me.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor.
All of a sudden, Coverdale's cool.
SubscribeNow@SchwabNetwork.com.
Unlike Coverdale, 529 plans have no income.
This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV.
It's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm going to be sick.
We have to buy that.
Government regulation.
Invest your way with Schwab.
What type of market structure is characterized by a single seller and a heavy government?
24/7, any screen, anywhere at SchwabNetwork.com.
A monopoly.
We're back on Morning Trade Live. Carvana is moving lower after BFA downgraded shares to neutral and lowered its price target to $360.
Government regulation, oligopoly. We're not allowed to have monopolies.
Carvana is down more than 25% so far in 2026.
So yeah, the government regulation would be the one. Yeah.
This morning for us at 312 and
my God.
Let's take a look at some of the other movers and shakers.
We're not even allowed.
For this Monday, we've got the leaders board.
Well, it doesn't.
Here with a number
It says which does it describe?
Higher today, Western Dig up 5%, Seagate winning on
Controlling the entire. Yeah.
The leader of the pack up 8%.
Why am I talking myself out of these?
Skydance up 3.8 and Lovin up 3.8% right now as well. So there's some of the winners on the session.
Monopoly equals singles. Yeah, I knew it. I thought that we weren't supposed to have those.
And Momentum also 3.5% lower as well. So there's some of the winners and the losers on the session so far. Joining us now, very pleased to say, is Jay Pawlowski, founder and principal at TPW Advisory. Jay, it's been a minute. So nice of you to join us. Look, in the context of this Iran war, now in week 6, how are you thinking about this tripolar world? Has it changed the way that you see it? Has it accentuated it at all?
A client who believes in active management.
And we're really focused on the trends.
Actively managed
here. The previous guest talked about how tricky an environment it is. And one of the ways to kind of deal with that trickiness is to focus on the big picture and the big
we're smoking. I don't care. Streak or not, we got one. We're on the board. My goodness, what a start.
This conflict is
accelerating
that. President Trump, his administration has been a great.
They're starting like the tortoise, though.
Of the tripolar world thesis.
But the tortoise wins.
We look at Europe integrating more closely together around defense.
Right, hold on.
We look at Asia integrating more closely together around trade. And now we have a situation where what we believe is a retest, not a reversal of our key themes of a global growth long cycle that we think began back in 2023 and is intact, leading to a global earnings cycle which supports
and there might be
stocks,
a couple of you, maybe a lot of you out there that question my methods, but
away from the United
just
States
watch.
to
I
the
started
rest of
thinking
the
different.
world, led by emerging markets. That was the story of 2025.
Yes, it makes you think different, but it's how it
story
makes you think
in
different.
2026. The U.S. is the worst performing
Often jump to
major region, down
conclusions
4%
people
year
do
to date.
on
ACWI
just
ex-US,
how
for example, is up over 1%
just which
for a
direction
500
the thought
basis
process
points
goes.
difference. And emerging markets are
It can
up
definitely go.
over 0.5%
It can definitely
year
go
to date.
haywire, but
So significant
that's trial and
continued
error.
outperformance of the rest of the world, which we think will continue as we get closer to a deal here in the Iran war.
But Jay, can we think about, and obviously this is setting China aside, which is
want
in a
some more
little bit better
coffee?
shape than the rest of its EM counterparts. Can we think about EM? Can we think about Asia? Can we think about Europe? The same as we did pre-war with oil at $100.
Yeah, no, that's a great question. And we've been very
That was
clear
cool.
to our clients that we're focused when we talk about
I'm not
EM.
even gonna act like we done it
We
before.
don't own the broad EM space, the
The
EEM you're
uniforms
showing.
for Zach.
We own China and we own Latin America. And Latin America has been the best performing region in the emerging markets because, as we've probably talked about on your show, Sam, a third of that index is materials and energy.
I think
And so
I'm pretty sure they
ILF,
have
which
that
is
power.
the EM LATAM ETF, has been a big performer. And look, China's been a
Two in a
laggard,
row.
but
Who
we
would
think
have
China
known?
is setting up very well here. It's a
I
leader
don't even like
in
this
renewable
yet.
energy. One
A
of the big theme winners coming out of this is the push for renewables. It's also a leader in automation. What comes out of this, again, is the conflict and the need for autonomous production and autonomous weaponry. That's the story in this war, much as it's been in the Ukraine.
It's got to be a bundle
So we
or
actually
something.
see a fusing together of the main trends of AI, climate, and defense all coming together as one. And so we expect continued spending, both fiscal and private spending, public and private,
Gotta be, right?
in
Bundled.
the years ahead in our
I'm starting to
tripolar
use trigger
world
words.
as a result of the Iran conflict.
There we go.
Has it changed the way that you're thinking
Wrap
about
the accounts,
investing
which
here in the
bundle,
US when you think about the
investment advice.
immunity versus vulnerability of
That's
the rest
kinda
of the
dope.
world?
I can't wait to
Look,
pass
the U.S.
this.
is derating,
It's so
and that's a good
financial
thing. It's a necessary
advice
thing. The
bundles.
U.S. had
It's
a
sick.
premium valuation
Trading and
while it's acting
custody
like an
for
emerging
some of
market. What we wrote about
typically
months ago, the EMification
almost
of
suitable
America,
for active
the
traders
Iran
who
war
value
is
bundled
that
services and
process
fees.
on steroids. And so we have a situation where the U.S. forward PE has come down from 23 times in the fall to 19 times today. It's the cheapest the U.S. has been in the last 5 years on a
pay for
forward
services
PE
they don't
basis.
use.
You've
If
noted
you're
earnings
wondering,
coming
that was
up
dumb.
already on the show. That's going to be the key.
Financial
And
risk
look,
is primarily
earnings estimates have gone up 5 weeks in a row.
the company's use of
the
debt.
U.S. is going to
Remember
be a
that
laggard.
one?
It's in a process of derating. It's in a
I
process
guess that's the
of
only thing we
losing
could lean
its
on is if
premium
I could
valuation
remember
across
these things
financial
verbatim.
assets. So PE premium goes down.
I don't think we can
interest
lean
rates
on
relative to
actual
other countries
intelligence
go up,
and
the dollar goes down,
reasoning
and that's a process
coming
that
to
we think will play
conclusions.
out over years, and that's why we continue to be underweight U.S. and global equities and overweight
And this
the
is
rest of the
finance
world,
with
again,
reason.
with a
One day we'll
focus
get there.
on EM, in our case, China and LATAM.
I wanted to ask you about that, actually. It's interesting that you raised the PE story because Ed Yardeni has a note out this morning talking about this tug of war between the PE and the E. And while obviously the PE has come off a bit, you're saying sub 20, the forward earnings have risen to 12.7%. That's a record high territory. I'm just wondering, and I talked to my previous guests in the last shows about this. We've seen this global repricing of oil rates and growth outlooks, but not so much yet on earnings revisions, Jay.
Yeah, and that's a key point. Dr. Ed's been on this. It's a critical point because what you're having is a very benign derating, right? I mean, the PE of the U.S., as we just said, has come
it's always about taxes,
it's
how the taxes are being applied and paid, and interest rates.
NVIDIA, as an example,
All
trades
how
at a forward
those
PE
are
that is less
fucking
than
with
the
people.
overall stock market.
That's all
That's
it is.
pretty wild when you think about the poster child of AI trading at a discount to the broader market. And so our view is, look, the sensitivity to oil, whether GDP or consumer, is much, much, much less than it was, 20, 30, 40 years ago. And so the economy, we believe, and companies can work through this as long as it's not sustained.
Treasury.
And I think
they
it's pretty
don't
clear
have
that
any.
It's not going to be sustained. Whether we get a deal today
Something
or
about the
tomorrow
zero,
or
and
next
then they
week,
mature
we're going to have
at
a deal.
par.
All parties need a deal.
So there's
and
something about not having to
we're going
worry
be,
about
as I mentioned,
it switching up
in a
on you.
situation where oil prices come in, the drive to renewables
Should we just use a free hint?
Accelerated. That's very bullish for broad EM because
No.
they can leapfrog the fossil fuel era in the developed market world. And it also drives automation. So as we think about things, we like in the thematic space, we're very invested in clean energy. We're very invested in automation and robotics. And these are the areas where we think coming out of this, investors can look both geographically, emerging markets, thematically, clean energy, and automation.
Yeah, and I mean, look, Invesco Solar ETF, TAN, which is something I would like right now, up 16% year to date, 62% since Trump's inauguration, even with the political football and some of the perceptions out there around the politics. Got to leave it there, Jay. Always appreciate it. Thanks so much for joining us today, as always. Jay Pawlowski, founder and principal of TPW Advisory. Coming up, we will get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live. We'll be right back.
That's definitely it. Investment vehicles for sure is a big deal, and then all these ratios.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we
if
are
they're simple
live
or
with
not,
analysis
they're not to
that
me.
matters. Watch now, only on SchwabNetwork.com.
You gotta know how you learn.
How's it going?
You know what you can't fucking learn.
Sometimes
Next. Try it again.
you could have done better.
Which type of taxes?
Same goes for where you invest.
What's an annoying one?
With Schwab.
What type of tax is the federal?
Whether you're a bull
tax?
or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane Kinghall, live from the floor of the New York Stock Exchange, only on Schwab Network.
In the state, it does matter how much you have in your estate.
Trading at Schwab is powered
So it's not a flat fee.
Giving you even more specialized.
Because there are some things like a convertible life insurance or something. They allow you to take some stuff out of your estate or take it off the bill.
Plus, get 24/7 live help.
So I don't believe it's a flat tax. We're taking a hint though, because I should have taken a hint from the last one. I don't think it's C though.
The final 90 minutes of the trading day, that's when markets make headlines.
Every question is a great question, you guys. Fucking
From
dicks.
earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see
I think it's
before the bell
progressive
rings.
so far.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
No. Oh, we said no, because that's okay. aka flat tax. Yeah, we said no.
Trade Live. CrowdStrike has announced a $500 million increase to its stock buyback program, bringing the total authorization to $1.5 billion. The buyback plan has no expiration date. CrowdStrike shares are down nearly 15% year to date. It has been caught up in the SaaS apocalypse and obviously the pullback we've seen across softwares. Look at cybersecurity this morning. It's a bit mixed, mostly lower if you take a look at some of these names like Palo Alto Networks down 1%, Fortinet just fractionally below the line there, but Zscaler managing to tread water this morning, up 0.3%. So obviously we are looking at a very bifurcated type of tech trade today as we are looking very mixed at the headline given all the conflicting Iran headlines we are chewing on this morning. Welcome back to Morning Trade Live. It's time now for the big picture. Let's welcome in Colin Martin, Head of Fixed Income Research and Strategy, Schwab Center for Financial Research. Colin, always nice to see you. What's on your radar this morning, given everything we're digesting today?
Well, we finally have some economic data or surveys to pay attention to because lately the markets are really being driven more by posts or comments from President Trump than the actual economic data. So we got the ISM services just a little while ago, and relatively mixed bag. On a headline level, it missed expectations, but we saw a big jump in the prices paid component. That shouldn't be too surprising given the rise in oil prices and what that means for gas prices. But you never want to see survey-based expectations of inflation pick up so much. It's at the highest level in a handful of years. And then we saw the employment component of that index drop very sharply as well, also near the lows of the past 4 or 5 years. And that's the risk that the Fed is looking at right now, the risk to higher inflation but a weaker labor market. I think the good news, though, in following last Friday's jobs report, is that the labor market does appear to be stable right now. So that the surveys suggest maybe there's some weakness ahead, but we got some good news last week. And any Fed officials who were worried about a significant deterioration in the labor market because of the potential negative consequences from the Middle East, that probably allows them to focus more on inflation for the time being and sit on hold for the next handful of meetings.
Okay, so they can sit on their hands while they focus on the other side of the dual mandate. Then what do you think will be the next catalyst? I mean, obviously we've got CPI this week and PCE, which is the Fed's preferred gauge of inflation. I mean, what are you expecting from some of that?
Well, we focus more on the PCE, but the number we're getting this week is from February, so it's pre-war. So it will be telling if you look at that core PCE number. It hit 3.1% on a year-over-year basis in January. It's expected to come back to 3%, but any way you slice it, that's still too high. It's been above the Fed's 2% target for a number of years now. And if we see
that's one
that
thing that
it
I'm gonna have
surprises
to
to the upside,
really
even
dive
before
into
the
too
conflict
after
began,
passing this is
that
how
wouldn't
I mean
send
I
a good
actually
message
already
for
know. That's
inflation
why
over
I'm
the next few months. Now
trying to do all
CPI,
this
it will be
YouTube
for March, so we
advertising
will get
and
that
getting
oil
all
and
these
gas
videos
pass-through,
and
and that's
promotion
being
up
priced
beforehand,
in
because then I
with the
think
consensus
afterwards I'm gonna have to
expectations. I think the
really
year-over-year
be cool
increase on headline CPI is expected
specifically
to come
what
in at
titles
3.4%,
and everything I put on things.
very high, and an uptick in core
Or I
CPI
think
as well.
people might just have to
I think
be
the Fed is
members
going to be
for me
very
to actually
careful
speak
here,
on things.
because they don't want to call it transitory.
Yeah, we'll figure that out.
Because we
You
saw what
might
happened the
have to
last
be a
time they
member
did
in
that, but they
order
also
to
want to be
listen to
cognizant
certain
of what they can and can't control. They can't open up the Strait of Hormuz.
podcasts.
They can't bring down gas prices, but they can manage inflation expectations.
That'll be pretty cool.
For now, inflation expectations tend to be relatively well anchored. Short-term inflation expectations, no surprise, they're up. If you look at 1 or 2 year TIPS break-even rates, 5-year break-even rates still very manageable. On the 10-year, so longer period of time, very much in line with its 5-year average. So I think the Fed, it doesn't want to look through and call it transitory, but they're going to focus more on how are market participants and investors digesting this, and hopefully they're not extrapolating and seeing rising inflation expectations going forward.
Well,
they
right,
didn't
but
say
it's been
like
quite
it was your
interesting
first
because if you
time,
take a look
so
at
it's
the
not. It
ISM's
doesn't seem like
counterpart, that is
if
the
you do it
S&P
one time,
Global,
it's
you actually had
okay,
services falling
which
into
is like maybe
contraction for the
10%,
first time
or
in
if
what was
you
it,
mess
3
up, it's
years
the
or
same
so.
thing
And I
every
just found
time.
what
It
the
might be
economist over
25%.
there was saying super interesting. I mean, they're talking about the U.S. economy buckling under the strain of rising prices and intensifying uncertainty. They use the word stagflationary,
10%
presenting a
reasonable,
major
right?
challenge to policymakers. I know that data print was largely overlooked by a
25%
blowout jobs report on
every single
Friday, but
time.
it's just really part of the whole
That really lets
puzzle,
you know
isn't
not
it,
to
Colin?
fucking
I'm
do
just
that.
wondering what the bond market is telling you right now where rates are at.
Yeah, I think the bond market is somewhere in between. We
Fuck
hear that
yeah. People are
stagflation
mean.
term a lot, and I think it's a little bombastic because the
Reduced it.
inflationary
Jeez
aspect of
Louise.
that is elevated, but nowhere near
Reduced the
levels we
penalty
saw
for
just
failing to take
4 years ago,
RMD
and nowhere
from
near levels we
50 to
saw back in the
25
70s
of
and
the
80s.
shortfall.
And on the growth side of
The penalty
stagflation, growth's still
can
doing
be
okay.
further reduced
I
to
think
10
the
if the
bond
error is
markets
corrected
are
within a
middle of the road there. They're
correction
focusing
period
more on inflation,
generally
but not
by the end of
necessarily the negative
second year following the
consequences
year.
to the economic growth. I think
They
if the markets were focusing on that,
are
we'd
not
probably
messing with
see
you. Like, take that
long-term
shit
yields
out
fall a
of the
little bit
principal.
more. We'd probably see 10-year Treasury yields below 4%. But right now, inflation's in the driver's seat. And the concerns you just mentioned from the S&P economists, those are concerns we
61
have,
days.
but we haven't seen it yet. So the good news is we think the economy was on solid
I love
footing,
that
and we'll wait to
61-day
see how the
window.
conflict plays out before we kind of
Just sticks
jump
out
to that
like a
conclusion.
sore thumb.
Feels like just tug
An
of war
investor with
everywhere right now,
90,000.
playing out in stocks, playing out in the bond market, the P
So
versus the E.
investors is at
Colin, really
$100,000
appreciate
per
you
coin.
joining us today. Thank you so much for that. Colin Martin, Head of Fixed Income Research and Strategy, Schwab Center for
Should
Financial
recommend
Research. Coming up, it's time for the Morning Trade. We'll take a closer look at Netflix after an upgrade.
letter of
Morning Trade Live.
intent
We'll be right back.
The LIE.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
1 year. Price volatility.
Schwab Network delivers real-time market insights live from the
yeah.
NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Has the shortest maturity and therefore the lowest
Whether
duration.
you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles.
It literally
growth,
says inflation
value,
protected.
Income, and more. Best of all,
I miss
you
things
can
like
ask
this
questions
somehow
by
though.
chatting directly with an education coach.
Provides protection
it's interactive
against.
learning at its finest. Tune in live or on demand. Head over
That
to
is a good tip.
schwab.com/coaching and start learning today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move.
The fact that she just said that's the most famous one, it would actually be pretty cool to step foot on that floor.
As the bell hits and the
I feel like I'd just become overly aggressive.
Opening Bell live at the NYSE, right when it counts.
Like inside voices out the window.
Here we are back on Morning Trade Live. Let's focus on the streaming space. We have some news flow from multiple streaming names. So Netflix got upgraded this morning. More on that in a second with Alex Coffey. Paramount Skydance has received $24 billion in commitments from multiple sovereign wealth funds to help back its bid to acquire Warner Brothers Discovery. And Comcast Super Mario Galaxy scored the biggest movie opening of the year at the box office this weekend. So shares in all these companies are up today. Paramount Skydance is very much winning on the day, 3.3% higher off the back of all of that. But we are talking about Netflix with Alex Coffey. Very good morning to you, Alex. We've had Goldman Sachs turning more bullish on this name. What went behind this call?
Yeah, Eric Sheridan over at Goldman upgrading Netflix to buy, Sam, from neutral. Price target also ratcheted up from 100 to 120.
Oh yeah, you're an agent. Yeah,
which of course implies
I don't even
about
know
20%
what I'm thinking about it. Yeah,
upside
you're
from
an
where we're
agent
currently trading. This is
to a
all ahead
broker
of the
dealer.
quarter
If you're
one
not,
earnings report.
you can't work if you're not
Mr.
under a
Sheridan
broker
at
dealer.
Goldman sees a more positive risk reward with the stock down. Almost 20% in the last 6 months, over 30% from the all-time highs made all the way back in June of last year. Saying that this earnings report will show a strong start, they quote, to 2026 as they continue, Netflix that is, continues to execute well against its core areas of focus. They believe that the company, in terms of its original and returning content, is driving user growth and engagement.
And I know it sounds like
they see momentum for Netflix from its pricing power,
talking about that man
both
a
its
little bit too
advertising
much.
tier
It'll be the
and
last,
its regular tier,
for today.
as a potential
But,
for
he's
capital
also
return through appreciation.
a broker dealer
and of
and
course, they did just announce those price hikes,
representative,
Sam,
so he can do
so that could drive
anything
some
and
more
everything.
guidance
Money
potential
is
to
how
the
he makes
upside.
money. Yeah, it's good.
Rosenblatt, this was
Ideally,
Barton
that's what we
Crockett
would
as
want
well
in the
over
end
at
too.
Rosenblatt,
We'd want to pass
their
all
price
these
target
series
to
and
96
all
from
these other
95.
tests
Analysts as a
and
whole,
certifications.
50 of them in the buy camp,
yeah,
15 in the hold camp, 0 sells.
If not our own
price
AR,
target, about
then
114 a share, Sam.
Or not.
Yeah, it looks like sentiment has very much changed, obviously, since we've
but
seen
not our own
things
IA
improving
or our own
following
broker
the
dealer.
overhang, which
So
seems to have been lifted off the back of that
IAR
whole
and
Warner Brothers bid.
agent.
But yeah, nice to know,
Sick.
obviously, what went
Commissions
behind that
and,
call today from Goldman. Thanks so
like
much
they
for
said.
that, Alex. Let's trade this name now with Mike Shaw, Director of Trading Education, Prosper Trading Academy. Hey, Mike, how would you approach an example trade for Netflix today?
Yeah, so
see,
what,
this one's already
when I
gonna
was
mess
putting
with
this
me.
together this morning,
Numbers.
we were trading a little bit lower.
Okay,
But what, the way that I like to approach this, I like the analyst upgrades and everything like that. I like the fact that we've broken out of, we've broken out a little bit out of this consolidation area, I don't think that we're going very far because we have earnings coming up in about 2 weeks. And so the way that I want to play this, I do want to play it with a small directional component. But really what I want to play is the implied volatility. So if we look at, the 102 strike, 103 strike, 104, 105, whatever it is, depending on how aggressive you want to be, I want to buy implied volatility for the 17th because earnings are on the 16th. That implied volatility is going to hold and most likely go up between now and then. And then I'm going to sell this week's same option against it, same strike against it, and take in that decay because that's not going to have the earnings. Now, I don't plan on holding this through earnings, just getting the interplay between the implied volatilities of the two, that the one I'm buying is going to hold or go up. The other one is just going to act probably most normally.
Okay, good look at Netflix there. We are trading higher, as we mentioned, just fractionally today.
I don't fucking know.
Hey, Mike, overall thoughts on the market today? Because we're just playing this game of seesaw at the moment. It seems stocks were higher as oil came off.
Or even when I know it's math.
Actually, oil popped a bit and stocks took a bit of a back seat, and now we're off the other way. So just walk us through your thoughts right now.
Strategy.
Yeah, well, I mean, ever since this has started, that's what really we've been trading. We've been trading headlines. There's been a couple hiccups in here, but it's almost like economic numbers don't matter, because anything that happens discernitively from this, what's going on in the Gulf, that's going to overpower any sort of ISM that we're talking about. Yes, we can talk about that because at some point, hopefully we're going to be done with this and we have to get back to the business of what we're doing. But right now, it is very, very choppy trading, a lot of rumor-driven, headline-driven. And once you get the headlines, who said it? Is it credible? The market is just going for the last shiny thing on the side of the market. So what do you do there? You tighten up your risk a little bit. You lower your allocation, and you don't stay married to a position for very long if it's not working in your favor.
Yeah, okay, makes sense. Anything can happen. We're waiting for a press conference at 1 p.m. Eastern, but we've had the S&P 500 managing to recoup 6,600. We're going to see if it holds throughout the course of the day. Mike, really appreciate it. Thanks so much for breaking down your thoughts today. Mike Shaw there. You're welcome. Director of Trading Education, Prosper Trading Academy.
Don't
Coming up, we'll take a
confuse
closer
the
look at
market
the
price
sectors
with
that
the
are on the move
price
this
at
morning's
which the
Investors
caller
Digest, the latest
obligates you
news
to
and
sell the
economic data.
shares.
Morning Trade Live. We'll be right back.
Cool. So we got a $45 put and a $55 call. If it went up to 60, they're probably going to execute it, so it's $55. Fuck yeah. Thank you, hint. Exam tip, caller. Yeah, what a caller is. The caller is what you're locked in and obligated if exercised. Put strike equals caller. Put strike equals floor price. Call strike equals ceiling price. Stock is collared between them. Yeah, no, nonetheless, we got that. I can't overcomplicate things. But according to modern.
Morning movers, be the first to find out what's shaping early market action. Tech check,
According
options
to
corner,
modern
futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Negative correlation.
Live from Chicago,
see, that's where they try to get you to go greatest. Like, obviously, zero correlation is good, but you can go even further.
Company news that shape investor decisions, all with
Why the
expert
fuck would they
analysis
throw
and
beta in
actionable
there?
context. From inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome to Schwab Network, where
benefits are
real-time
greater
market
when
coverage
assets have
meets
negative
expert
correlation
strategy.
and
From
one
the opening
zigs, the
bell
other
to the
zags.
closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of
They
change
can't
in
get
sales
inside our
based on their
mindset.
guidance, but not the same rate of change on EPS.
Follow the biggest headlines,
They're trying
live
to get there, though.
analysis, breaking
It's
news, and
technology.
sharp trade ideas.
It's cool, though. What a time to be alive.
With shows built for action, we break it all down in real time with
I guess you
speed,
gotta be scared of
accuracy,
everything
and
new.
precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights,
An investor
actionable
wants to
data,
evaluate a
veteran traders,
portfolio.
and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Time weighted.
We're back on Morning Trade Live. I'm Sam Vardis, coming to you live from the New York Stock Exchange. It's time now to take a look at some of the sectors that are moving markets this morning. So Kevin Hinks is joining me now from Chicago. Kevin, so nice to to have you on the show again. I'm just wondering, obviously with stocks in a bit of a holding pattern as we await this 1 p.m. Press conference and some sort of update on talks of this potential ceasefire, it feels like there's nothing really to write home about in this market, with things looking pretty range-bound under the surface as well. Just talk to us what stands out to you right now.
The financial life cycle.
Sam, I think these markets are coiled and waiting for some news, some genesis of the next move in this market. I'm looking at the different sectors. When I was sitting here waiting to come on the air, there were 9 sectors higher and just 2 lower. Then they moved pretty dramatically. I saw industrials go negative. I saw it go almost 7, 4, 6, 5. Now they're drifting back higher. There was a pretty interesting sell-off just a few minutes ago from up 0.4
when you're
and the S&P to up about 0.2. So right now, as we sit, we're back to 9 sectors higher and 2 lower, but a couple of them are very close to unchanged. Industrials are really the one that's going from positive to negative almost by minute. So we're, to sum up this market, we're waiting.
I guess
for
you're
the
not
next
supposed
genesis,
to do anything
and
entirely.
crude
That
oil
was
is
stupid on
moderately
my
down,
part.
so stocks are moderately
You're supposed
higher,
to
but that can change without warning, Sam, at any moment.
Yeah, absolutely. I'm just seeing that as we await a little bit more clarity, as you say, with stocks looking pretty range-bound, there are a few pockets of the market which are sort of outperforming, and we've mentioned that earlier. It's the memory that seems to be really leading the pack here, leading the way. Came off the back of a strong showing for some of the South Korean and Japanese names overnight. Can you talk to us about what you're seeing as far as tech is concerned? Mag 7 looks pretty split right now.
Yeah, when you see the S&P up 0.3, but the equal weight up about 0.25%.
Holy shit, it's a 70.3%.
Between the two, when one can sometimes take the lead. I've got Nvidia a little lower. Microsoft continues its softness, but Apple's having a nice day. And you mentioned memory, Micron, Intel, Texas Instruments, Monolithic Power, Analog Devices. They're all higher on the day, so that sector within the sector seems to be firming up here. Besides that, it's a pretty balanced market. Not a lot, not big leadership from the Nvidias, Broadcoms, Microsoft, but Amazon's a little higher. I've got Apple, of course, Google Alphabet slightly higher.
50%?
So it's a mixed, the breakdown of the market is very similar to what the overall market is doing. It's very mixed. It's all the gains are modest, but so are the losses. And so this is a market, despite the economic data that we got today and that we're going to get throughout the week, it's still a market coiled, waiting for some news from geopolitics that either puts pressure on crude oil or puts more uncertainty in the commodities market.
Speaking of breaking news, Kevin, just want to get our viewers across some of these lines now coming from the Iranian side. The IRNA now saying Iran's response shows Tehran rejecting the ceasefire and emphasizing necessity of permanent end to war. Iran's response, they go on to say, consists of 10 clauses, including an end to the conflict in the region, protocol for safe passage through the Strait of Hormuz, lifting of sanctions and reconstructing. That is citing IRNA. Now, of course, we know that the mediation is happening via Pakistan. We've been watching, obviously, these lines coming out of President Trump's Truth Social at the weekend with some very choice language that he used, rather irreverent. But let's just talk about what we have learned right now, because we're not seeing a huge move at this stage. I know the S&P 500 is sort of just dancing around that 6,600 right now, but then obviously this just continues to show how conflicting these headlines are.
I think the hardest thing for Americans and U.S. investors to figure out is it truthful? What we're getting, the misinformation that we're getting from all different pockets. Remember, one Iranian spokesman said they would not meet in Islamabad with Pakistan and the U.S., and another official came out and refuted that and said, we never said we wouldn't meet, we want to meet. So I think you have to wait for U.S. representatives to comment or Pakistani representatives to comment. I don't think, as investors looking at the market, we can trust words coming out of the Iranian government. So I think you wait. If you're trading these markets, if you're watching, you're very patient here, and you wait for some statement from the U.S. government on what they're seeing in Iran. Misinformation is all over the place, as you know, Sam.
Absolutely. It's coming from multiple sides. We wait for that press conference out of the White House at 1 p.m. Eastern. Kevin, thank you so much for breaking down your thoughts on these markets.
All
right, well, coming up, it's time for Inside Out.
S corps have passed through taxation. Yeah, they don't get, are limited. They can only have one class of stock. They are not subject to double taxation. I knew that one. That's C corps.
Hey, investors.
Thank goodness.
You know the market moves.
Yeah, S corps
Schwab
free
is here to help
tax.
you move with it. So, whether you're buying,
limit,
selling, holding, or planning,
one stock,
whether you're ETFing or 401k'ing, saving, spending,
or
even retiring,
oh no,
you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Trading at 22.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Oh, it's
Next
25
Investing, 1
minus.
p.m. Eastern.
Only on Schwab Network.
No, 250 and then.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach.
10%?
Interactive learning at its
10%
finest.
discount.
Tune in live or on demand.
Let's go.
Discount
Discount equals price minus NAV divided by NAV equals 22. Oh. I did it differently.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
So I don't know if I'll get it right on the.
We're back on Morning Trade Live. Let's take a closer look at Alphabet now. The Google parent company stock has been an outperformer among the Mac 7 over the last 12 months, up more than 95% year over year, but it has struggled since hitting that all-time high of $349 on February the 3rd, ahead of earnings, down 15% since then. Let's take a look at the price action right now. We are sitting up around 0.5% at 297 and change on Google. So a little bit of a bright spot amongst the Mag 7 today, a bit mixed across our major players in this market. So let's talk about Google Alphabet. Go inside out on this name ahead of first quarter earnings. So joining us now is Ali Mogharabi, who's the senior equity analyst, West End Capital Management. Ali, always nice to speak to you. I do want to talk about technicals because I know you look at the charts and these things matter, particularly when we've seen this sort of average member drawdown in the double digits. Suffice to say, Google Alphabet has been relatively unscathed compared to some of its counterparts here. But just walk us through what you're looking as far as the key support and resistance levels on this name.
Registered representative. No promises.
All right, we're having a little bit of trouble hearing Ali. Have you unmuted yourself there? Yes, I've got you. Loud and clear. Go on, Ali.
I apologize. Yeah, so I was going to say on the technical side, it was actually good to see the stock not break through that 270 support. So that's positive. And I think in terms of the resistance, the next resistance we're seeing is around 310. And after that, 320, 330 would be pretty doable. So from a technical perspective, as you pretty much mentioned, compared to some of its or most of its peers, we think it's actually performed pretty well.
And why is that, Ali, do you think?
For a few reasons. Obviously, the cloud side of the business is doing well, not only in terms of growth, but also margins. The margins expanded very, very well last quarter, and we expect that to continue. Gemini is actually gaining market share against ChatGPT. So that's doing pretty well. And they also, on the Gemini front, it's not just on the consumer side, but also on enterprise side. Given that they have the cloud business, they have opportunities to go in and gain further traction on the enterprise side. But obviously, Claude is the leader on that front. And then in terms of advertising overall, obviously the economy is doing pretty well. There's some geopolitical factors that create some doubts, but as long as the economy continues to go forward as it is right now, ad demand is going to do well. We checked at the recent pricing and also the ad returns. It looks like search could actually generate growth in the mid-teens this Q1. So from the ad side, that looks good too. So overall, looks like their segments are doing pretty well.
And it looks like that AI is translating into some of that search growth as well, as we saw in the last earnings. We've seen the CapEx, we've seen the eye-watering numbers some of these companies have thrown out. There was 185 that Google announced last quarter. I'm just wondering, with everything that you mentioned and in mind and all that it's got going for it right now, what can we expect from this earnings season?
Well, we hope to see that these guys obviously beat the top and the bottom line. In terms of CapEx, it really depends. Again, there's some other non-enterprise specific factors involved, mainly the geopolitical factors, but continue to see CapEx to remain basically where they guided to. And I should say that, these guys are still going to generate some good amount of free cash flow. And mainly because they have other advantages too. I mean, they do have the lower cost TPUs, more efficient, especially on the inference side, TPUs that they utilize in-house. And at the same time, they're taking steps towards commercializing that. So I wouldn't expect that much pressure on margins from the additional CapEx and obviously the higher DNA costs this quarter and going forward.
Good to know. Good setup ahead of Q1 earnings. We'll be watching. Ali, always appreciate it. Thanks so much for joining us today. Ali Mogharabi, who's the Senior Equity Analyst, West End Capital Management. Let's trade this now with
They
Tom
never
White,
said
host of
anything
Fast
about
Market. Nice to see you again, Tom. Just walk us through
interest
an
rate
example trade for
sensitivity,
this
so
name,
that was
given
actually
everything
not a really
Ali
good
just
question
laid out
because
there for
A
us.
and D
I
had
think you
the
take a look at
highest
the different
duration.
silos of revenue generation. You didn't even mention that much.
They both
the
had
cloud
10-year
growth that they saw
durations,
last quarter,
and then the only
as
thing
you're
different
eating into
between these
AWS
were
and
the
Microsoft's Azure
sensitivity.
business
It's
also. So
completely
that's going
out
to
of
be
the
key. They've
question.
got
Quite
earnings
literally.
on the 23rd of
maybe I was-
April, so that's going to be a key catalyst. So I went out a little bit in duration on a directional biased type of trade. The stock's pulled back about 14% from those record highs that we saw. So we're not to the May 15th monthly options. So you've got about 38 days, 39 days till expiration on this one. I'm going to buy something slightly in the money that's bullish. I'm going to buy the 295 strike call in the money by about $3 to the downside. That's the higher delta that reacts more like the stock. And then against it, because I want to offset some of the costs on that bullish call purchase, we're going to sell the 320 strike call. So a bullish $25 wide call vertical out in the May monthly options. You're going to pay roughly about a $10.50 debit for that spread. That's $25 wide. So you got a pretty good risk reward setup on this one. If you pay that $10.5 debit, that's going to be your risk, $1,050 in risk on this one. That can expand to 25 if you get above that 320 level over the next basically 5.5 weeks on this trade. Your break even on it goes up to 305.50 to the upside. That's only about 2.5% above the current share price in Google Alphabet. So you got a pretty good risk reward set up on this. On a percentage basis, you don't need that big of a move to get above that break even. And because you've got 39 days in this trade, and maybe that catalyst being earnings or ahead of earnings, you can actually start closing all or a portion of your position prior to expiration on this type of trade. So bullish call vertical here that gives you some flexibility on trade management, and with that break even only about 2.5% above the current share price.
Great stuff. Thanks for the example trade, Tom White, on Google trading higher today. And we have got the S&P 500 higher today, but off the highs off the back of this report around Iran rejecting a ceasefire and demands for a permanent end to the war. So we will continue to watch this. We approach a 1 p.m. press conference from the White House. You've got Trading 360 coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network,
Capital
where real-time market coverage
appreciation.
meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world, I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Nice. I actually got that right. Formula and everything. Oh, shit. I think securities app is...
Good morning. We are 90 minutes into the trading day, and welcome to Trading 360. I'm Jenny Horn, coming to you live from our Chicago headquarters. Here's what's coming up on today's show. In our 360 Spotlight, we will look at the ongoing conflict in the Middle East and its impact on the economy as oil and energy prices continue to rise. Our disruptor is Twilio after Jefferies upgraded shares to buy and cited its conviction in the role the company will play in the voice AI tech stack. George Schills will break down the call and give us an example trade. And in our 360 round, we will look at gold, and while it's down from its all-time high, it can historically perform well during these times of geopolitical uncertainty. We'll dive into the price action and how the approach right now to really invest in the space going forward. But now let's take a quick look at the overall markets, as we have seen nothing but strength today, as we are still higher in all four of our major averages, with right now some of that strength being led by the NASDAQ, actually up about 0.4%. S&P is also up 0.2%. The Dow 0.2% higher, while the Russell 2000 is, of course, just modestly gaining here in real time. As we do check in on some of these futures products, though, we are seeing some decent, actually, outperformance from things like Bitcoin, leading a pretty nice charge today at 4% for the futures products. Well, we are seeing a bit of a pullback in the 10-year, as well as the U.S. dollar, and gold also a standout today at 6 cents per percent. Naturally, with markets higher, we are seeing crude, of course, contracting by about 0.5% here on the session. But now to help us kick off our show, I'd like to welcome in Alex Coffey, of course, my co-host every day on Next Gen Investing. And we're looking at some of the trends we're seeing from the sell side here in regards to, these hard disk drive memory makers. And that's been a huge proponent of AI. I know it's pulled back, but seeing a call today that definitely is reigniting at least some favorability in names like Seagate, Western Digital. Yeah, no doubt. Big picture, sort of the sector read through analyst over at Morgan Stanley, Eric Woodring. You'll say this 10 times fast. Sees the continued strength in hard disk drive demand.
Hard disk drive demand. Hard disk drive demand. Hard disk drive demand.
Extending through 2028.
That is kind of.
So
it just sounds weird. Then it pause. Hard disk drive demand pause. Hard disk drive demand pause.
Which of course is good for pricing for many of these names.
Pause.
Hyperscaler demand remains strong, improving visibility for vendors. Customers are also locking in that longer-term demand, supporting that firmer pricing through 2027.
He said it again.
So all in all, that HDD end market backdrop is improving.
Okay.
You mentioned a couple of the names. In particular, Seagate stands out. This is now the
revocable.
Firm's top pick.
Hey, we were saying this earlier.
Replacing Western Digital, which we'll talk about in just a second. They raised the price target on Seagate.
I think I was alluding
to 582 from 468. They do keep that overweight rating.
Revocable living trust provides which of the following benefits during the grantor's lifetime. This is what I was talking about earlier. Okay, revocable. This is where they can take things off their list of things that they own, and then they can avoid probate.
Pricing, tighter supply dynamics, but
yes,
both stocks
that was
a nice
confidence.
Day. Naturally, Seagate doing just a little bit better, but about 7.5%.
Western
Digital was up about 4.5–5% on my last
company with the market.
Okay, and given how volatile these names have become, because to me they're almost now like a proxy of broader tech. Do you think that the recent pullback we've seen is actually maybe an opportunity, considering that we were at, sky high valuations? I know there's a lot of growth expectations, but also with the come down in price in a lot of these tech exposed equities, many are looking at it as like, hey, an opportunity.
Yeah, it's always going to come down to time frame and thesis, right? But just from a trading lens,
I
think you bring up a good point,
mid-cap.
which is in many ways this is now sort of the intraday battleground. On these recovery days, the positive geopolitical days, you're seeing the reaction function take place here. It was
because they'd be up in 100 millies,
chip stocks, Western Digital, Seagate,
or 100
Micron. You're seeing that reaction function there. So good day for the market means good day for memory.
It's true. Forget about the Mag 7. It's like our magnificent memory and storage components and hard disk drive players, which again, say that 5 times fast. But appreciate it to Alex Coffey for helping us kick off our show today. Of course, my co-host on Next Gen every single day. But now for some further news on the insights shaping the overall markets, I'm now joined by Ted Thatcher, who is the president of Bright Lake Wealth Management. And Ted, thank you so much for being with us today, first and foremost. But in your view, as we start things off, how serious right now is the risk that higher energy prices could lead to this right now really inflation-driven overall shock to the U.S. economy?
I hope it's 15. Oh, cool.
Yeah, Jenny, it's great to be with you. I do think, I would say the markets have been on pins and needles, but after all the headlines and how they've shifted this morning, with all the green, I think there's a little bit of headline sort of fatigue in the market right now. The
Aren't
truth
they
is, at this
green?
point, I think
You
the
can be
street is
green.
really just saying, hey, once you have some real data in terms of changes, adjustments with everything going on in Iran and throughout the Middle East, then we will move. Again, the point being, when I see crude WTI at 110, I think that's the street simply saying, hold on, we don't believe that we are out of the woods on this yet.
I think the market definitely agrees with you there. And we know with growth estimates coming down and inflation expectations moving up, I mean, what would right now tell you that we are falling into maybe this true stagflationary environment?
Jenny, when we think about stagflation, the hallmark of stagflation is inflation, headed north and the labor market headed south. And that's exactly what we are seeing today. And it really puts the Fed in this terrible bind. The Fed's nightmare is this situation that I'm describing here. And when we think about the cause for the inflation we're seeing, throughout COVID, we saw this demand-driven inflation. That's not what we're seeing today. We're seeing supply side restrictions driving inflation. And so in order for the Fed to actually be able to break that type of inflation, it's going to have to take some extreme measures if this whole conflict persists.
Okay, that was actually going to be my next question. As we know, growth estimates coming down, inflation expectations continue really to, drive a lot of, I think, then the Fed's next move. I know that some of the labor data we got last week also maybe put a pause on that. But as far as like assessing some of the growth from bond data and also just the overall expectations for the Fed, do you think right now the Fed is in a very difficult position just given the conflicting data and obviously the looming threat of just geopolitical tensions?
The shares go down.
No, again, absolutely. It puts them in such a bind. We think about the bond market as sort of been a little bit of a governor on some of these policy talks. Obviously we saw the 10-year spike up, and it's kind of pushed some of these, negotiations, ceasefire discussions.
It's not a reverse split.
And, that, is exactly what the Fed's thinking about is the cost of all this. And again, when we pair that inflation with the consequences on the labor side, yes, we saw some labor data, but I think the overall trends, have been really, really cracks, if I could be really kind about it. And so when you have that rock and that hard place, it does kind of beg this question, how much of an economic downturn are we willing to put the economy through to tamp down the inflation that we will see certainly as this conflict continues to persist?
Okay, to shift gears a bit, you have flagged mega cap tech as a potential opportunity, as I think most market participants are really saying right now for the overall recovery of this market. But what specific valuation or technical signals would make you more comfortable perhaps buying from here?
Yeah, I'll pick out one name to start with. That's Microsoft. Microsoft is, gotten really beat up, I think, in the news headlines. And if you ask me, Microsoft's going through a moment that Google went through about almost a year ago now. If you rewind the clock to where Alphabet was actually in May and June of last year, we were putting them out on the green mile. They were on the, way out. We were saying ChatGPT was going to take over their search business. And really, what's happened since then? They went from trading at a PE of 18, 19 times to now trading at where the S&P is around 28, 29. And I think Microsoft is going through, again, the same type of situation, but with Anthropic. Google was able to use its distribution to its advantage in its AI play, and I believe that Microsoft will in the future as well. So that's the sort of turning bull case for it. But right now, where it's sitting on a technical standpoint is below the 200-week moving average. And I love to quote Charlie Munger. He always said, if you just bought amazing companies on the 200-week moving average, you would outperform the S&P 500. The problem is most people just don't have that kind of discipline.
Yeah, it's a great point, though, as well. And I will say that Microsoft, and a lot of these names, I feel like the next wave of growth is we need this, real proof of concept for, monetizing all of its AI spend. And you mentioned the comparison of Alphabet, but both names have been a bit hit by some concerns about how quickly they're able to monetize these products. Does that give you any concern when you look at a lot of these mega cap names that are spending so hugely right now in AI?
Of course, I'm an investor, right? We work with investors every single day. It has to come back to ROI. I do believe that it will come all the way around. The truth is these large mega cap companies, especially in the name of Google, they're funding these things from cash flow. And that really is important to me. If I may also pick out another name, though, Meta does stand out to me when we talk about the ROI discussion here. There is nobody out there today that gets the kind of ROI on their AI spend as Meta does. We could talk about their Andromeda algorithms for targeting. We could talk about their ad platform, adding the Advantage Plus kind of siphon within it that allows advertisers, small businesses, and large advertisers to not just use their Andromeda targeting, but allows them to create ads on their platform. And again, I'm just really impressed with how quickly that name Meta has been able to do the quick turnaround when it comes to the ROI side as well.
Yeah, and I mean, I think an important theme you mentioned is the sustainability of that ad pricing. But as far as like its broader hyperscaler spend, I know Meta has been criticized because it doesn't really operate in the cloud the same way like AWS, Microsoft, Google do, because obviously they're able to capitalize on the fact that they're renting out that space. Meta is a bit different. And so as far as ad spend, I completely agree with that. Is there any concern with Meta and some of their growth prospects moving forward because of the fact that it is heavily leveraged again to its AI spend?
Securities regulations, providing educational materials about investing, recommending suitable investments to customers, guaranteeing, we don't guarantee anything, guaranteeing to repurchase shares at purchase price, disclosing all material facts
that these
about,
large mega cap names are just so overvalued. The average small man investor can't get into the market. And when I see the kind of pullback that we have, to me, that looks like a potential buying opportunity for those that have maybe been on the sidelines, been a little bit concerned about valuations. And so, again, sometimes when you get those muddy waters, you do get a few opportunities.
Yeah, and I think, thank goodness, because a lot of these names, frankly, we need to see a bit of come down in valuations. I know that was the big concern, but hey, as you did say, we're looking at things a bit more on sale, at least as far as our mega cap tech is concerned. But so appreciate your time today, helping us kick off this trading week. Ted Thatcher, president of Bright Lake Wealth Management. Thanks so much for joining us today. Now, plenty more to come on Trading 360 today. Next, it's the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will go through the technicals, and Scott Bauer will take us through the trades for Cheniere Energy, Tesla, and Uber. That's next on Trading 360.
If you got that one, you got it. Corporation wants to sell restricted stock under Rule 144. XYZ has average weekly trading volume of 50,000 shares and 2 million shares outstanding, which is the maximum number of shares the affiliate can sell. Is that the wash rule or something? There's some like wash rule or something, I think. Oh, I'll put that there. Feels good. I was having some tummy issues earlier. Just like pain, nothing weird. So don't think that's what the red thing is for. My OG, my grandma's OG health thing. Put like boiling water in here. Lasts for hours. Lifesaver, man. This thing's older than me. Older than my mother. Probably cost literally like 50 cents. I mean, they were getting ice cream back then for like, yeah.
Is Opening Bell with Nicole Petalides live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell live at the NYSE, right when it counts.
She looks like you, Dad.
Aw, she's got your smile. Carl. Yep, your #1 broker's here to welcome your new
hint on this one. I'll take a hint. If I'm thinking too hard on it.
We have everything we need all in one place.
It's lighten the load.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab as everything you need is making me cranky.
Does somebody need a nap?
Especially for understanding how restricted and controlled securities can be sold to the public. Here's a hint to help you tackle this question.
Welcome back to Trading 360. I'm Jenny Horn, and it's time for the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. Great to see you both. Scott, let's start really with your big picture thought, and I'm sure you have a great read on the overall markets as we, of course, digest another weekend of news, and of course some news today that's at least leading to some upside.
You know, there's this old saying of past performance is not necessarily indicative of future performance, right? So if we look at, you know, the last 4 weeks, 6 weeks with geopolitical events and news that has hit the tape, fading the news has been the right thing to do. Is that going to be the same thing that happens tomorrow? Anyone's question. That's why, you know, volatility still remains high, and if I was going to lean one way or the other, I'd probably lean to the short side and long energy because of that.
Okay, and so that's actually where we'll start, looking at a name that has been a clear outperformer in light of some of this news. That's Cheniere Energy, which is now, I mean, up 45% and some change this year.
What
walk
about
us through your thinking there, and of course how we trade a name that has been such a solid and steady performer, but obviously is contingent on some of the various oil pricing and geopolitical tensions as well.
Sure, this one is completely just based on, you know, geopolitical events. So I am selling an iron condor. I'm doing that because volatility is still really expensive.
Yeah, what about
lots
it though?
of
Like,
premium.
how does that make it a limit?
Selling the
Or
280,
that it happened in general?
275 put
That it
spread. I'm also
preceded it?
selling
Like
the
that
290,
event in
295
general
call spread.
preceded
Both
and
of those
happened?
expire this week. I can collect
I don't know.
$2.75 for that. That is a lot of premium. My only risk to that is 225 if there is a big move one way or the other, but because I'm positioning the put side closer to being at the money, this definitely has a bullish tilt to it.
And I mean, bullish till today, even as we're seeing, I mean, again, some decent strength in spite of the fact that actually crude oil is the futures products are at least
limit
today.
is
So I think
whatever it
great
was,
call out
the
there. And Rick,
preceding.
as you now assess,
50.
again, an outperformer
That's
on
my guess.
the year, and of course, a name that's been in a really strong uptrend. Walk us through what you see from a technical standpoint.
I always think it's fun when the tickers kind
whatever
of
the
match up with the
preceding
company
was, that's
LNG,
the
liquefied natural gas. But what we can see here, 277 to 292, kind of roughly this general area here is what that trade would be targeting here. So looking for you know, kind of a failure to overtake those old highs that we established here near 300, as well as hanging on above this notable downside area. We had here a double bottom near 271. We also had our gap form at 267. So that gives us a couple boundaries to keep in mind. 245 as well also stands out because it was a repeated ceiling for our price activity here. Then after our gap up, it was around where we established our worst close. We did make some intraday lows beyond that point here. But in terms of the importance of our price activity, the closing price is often regarded as being more crucial to trading decision making than intraday fluctuations here. So when we do consider our moving averages that we follow, price is sitting right around our 5-day EMA in dark blue here near 283 roughly. A little bit below that, if we were to break beyond our channel type shape here between our two white dashed lines, our teal 21-day EMA sits at about 272. So that could be another area to keep in mind, especially since it roughly lines up with some of our bottom price activity that we saw there.
I do want to
kind of an interesting situation as well. Our green trend line has been broken. Our overbought activity has come to a halt here. We did see a small amount of
a couple new items in the merch thing last night, or the merch site.
Despite being overbought.
Some finance with Reezuhn items actually.
We're still far above our 50 midline here.
Obviously I ain't gotta buy shit, but at least look at it, you know. I swear we added some shorts. I have some money now. I just moved. I sold one of my call options got executed, or you know, assigned to me and all that. So I moved some paper. I'm finna get a bunch of merch, and then you're gonna start seeing me wear this shit. Yeah, I'm finna cop the shorts.
Has been left in the dust for now. This area here near 250, 253 or so is a
I'm finna cop the shorts and a mug. You're gonna start seeing instead of that clear thing, you're gonna start seeing me drink my finance, my morning coffee and all that shit. Like when we're studying, it's gonna be out of a finance with Reezuhn mug. It's gonna be sick.
To push above, and the bears would want to see a slip below.
Cool.
Okay, now to shift more into the broader automotive space, more of these alternative energy names like Tesla, which of course, Scott, we saw a pretty major day of selling, at least Thursday, in reaction to its first quarter delivery numbers that were weaker than at least the street was expecting. But when you look at Tesla here, I mean, we've pulled back substantially. It's one of our worst performing of the broader Mag 7 if we're still using that acronym, but also lower today. So say looking to lean in to say some of this recent weakness in Tesla.
I'm gonna get that for my dog.
I really am, and I'm going out not just this week, but to next week to give this a little bit more time. Same kind of situation though. Implied volatility premium is really, really expensive, so I want to have a credit, which I'm going to do here. So I'm going to do an iron condor, and I'm going to sell the 355, 350 put spread. That's right at the money right now. Tesla is right there, and then I'm going to sell the 385, 390 call spread. Both of those expire next week. I could probably get a credit now that the stock is down here of 275, 280 or so. Again, completely defined risk, bullish bias to this one.
And this one again has still a lot of levers. I know that some of the analysts today with some updated price targets are not so optimistic. JP Morgan was when I saw 145, but I know that's one of those names that does definitely still garner a ton of attention, whether you're a bull or a bear in this name. And so now, Rick, as we do move to looking at the recent trends from a technical view, what do you see here when it comes to Tesla?
Yes, Tesla often feels in some ways like Bitcoin. It's never really boring. I'll say that about it. But 352 to 387 roughly would be around this area here, kind of generally targeting this point. Pretty close to some of the areas that I marked off here. Roughly 352 or so represents our recent relative low point here. Meanwhile, 383 is where I highlighted here because it was a significant low point there. It was a repeated stopping point, and then it became resistance after price did break to the downside here. So now if we were to consider what might happen if we breached our downside level of 352 that we mentioned, 340 here is where we formed a small gap here that actually became the springboard to our big push to the upside. So that's another level that stands out. The gap was never actually filled. These gaps in trading, we often keep track of them because they can be significant price points at which some kind of fundamental data or news event here changed our price activity here. So some food for thought there as we go forward in this name.
Have you ever seen Trading Places?
In this case, kind of paint a different picture. We're more on the decline in this stock.
Obviously, Randall
major moving averages.
Mortimer.
Our moving averages, our faster ones are starting to cross below our slower ones. Not really a good trading signal, but just an easy visual indication of the way things are going here. We have given up our longer term orange 250 one-day EMA as well. That's our most significant one, and that sits near 383. RSI actually kind of muted here. We are kind of more toward the lower end of our spectrum here. We have not managed to cross above that 50 midline for quite a while here, but we do see that there's a very slight improvement here. You can see our green line. We did not actually make a lower low on the RSI, and we've managed to stay out of the oversold area. So what the bulls would want to see would be for price to solidify and regain our downward sloping channel type shape that we have seen. We're starting to drift to the downside from there. So the bears, on the other hand, would want us to take out those recent relative lows. If we were to move lower, we're actually starting to get into a very significant volume area here. This is kind of a general big point of activity here, but really like 340 to 320 right around here is the heaviest area of all in terms of this the spike in trading activity. Meanwhile, to the upside, there is a pocket near 400, but 420 to 450 or so, that's another heavy trading activity area that also contains our point of control, our thick red line near 435.
Okay, now to shift gears into a name that actually correlates to similar worlds of Tesla, that being Uber. Uber actually recently unveiling this $4,000 credit for drivers if they switch to an EV in spite of some of the rising gas prices, which I thought was kind of interesting. But Uber today really not doing a whole lot, basically unchanged on the session. And so, Scott, when you think about trading Uber, obviously has similarities to Tesla, but growth profiles are entirely different.
I'm incredibly annoyed
about. Very different in these names as well.
Absolutely. And when I look technically at Uber here, it definitely has some hurdles it has to get by on the upside here. 50-day moving average, and there's some other resistance. But fundamentally, I really, really like the upside on this stock. So I'm going to give this one more time. I'm going out to May expiration. So I've got about 6 weeks or so on this one. And I'm just buying a simple call spread, the 75-85 call spread. Could do that somewhere for around $2.20, $2.25.
Well, I guess once I get monetized,
definitely
I'd like
some
ads.
hurdles to get over here, but I really like the upside in Uber.
I like
okay,
ads.
and I think that the upside is something that, again, many could argue that we're seeing things at a bit of a discount because we've obviously pulled back pretty substantially in Uber here as far as overall share price. So, Rick, last but not least, when we walk through this chart here for Uber, again, you can very clearly see the downtrend we've been in, but always areas for opportunity when things are a bit discounted just relative to past highs.
Yes, indeed, a downtrend during our past quarter and a half or so. But in the shorter term, since our last earnings event, I think you could argue that there's actually a bit more of a range for right now. We've established a consistent bottom based on our recent lows near the 69 level. Meanwhile, 79 around here is where we had our worst close. That's where we saw our breakdown point.
Yeah, they're always about the S&P.
Longer term, yes, indeed, a downward sloping channel type shape. In the shorter term,
but we're talking
some
international.
Room for optimism here
that's
as price
these
seems to have
guys.
solidified at this lower point. Now we can see that our moving averages are more similar to our last chart than our first chart here. We are right around our blue 5-day EMA near 7160. Our teal 21-day monthly EMA just shy of 73.
With everything going on, the war and all of that, I wonder, man, we got to check in on that actually.
To retest our gold 63-day EMA around 7640 or so. RSI has seen some improvement here, despite making a lower close here. We actually had a higher reading on the RSI, so perhaps a bit of bullish divergence. Meanwhile, our short-term downward sloping trend line has been broken as well. So look for price to start to gain some strength, and for the RSI to cross above that 50 midline for more of a bullish signal. Volume profile shows that we are entering this heavy trading area here, 72 to 75. This is a very obvious node, a very heavy trading activity area that you can see here. Then there's a bit of a gulf until we start getting to around the 82 to 87 area. So particularly around 84, that's where we have the most notable highest spike in trading activity. So this is why we kind of try to look at volume profile to show these high trading concentration areas that might represent a potential consolidation or breakout points. That's kind of when we put everything together, it can help inform your decisions.
Yeah, absolutely. And of course, Uber here now seeing a bit more weakness, down about 0.2%. But last but not least, Scott, before we let you go, just wanted to assess what you're watching for the rest of this week. As of course, new trading week, full trading week this week compared to last. I mean, right now we're waiting for a hopeful ceasefire. But how do you go about navigating that volatility, given that it's so headline driven right now?
It really is, and it makes it a little bit tougher this week because we've got so much important economic data coming out later in the week, inflation data, plus Fed minutes. So, I think you have to keep things really close to the vest.
They've been steady for a whole year.
You can pick one side or the other, but depending on what happens tomorrow, by the time we get to Wednesday with some of that inflation data coming out later in the week, that might be the focus.
Yeah, and I definitely would say it's one of those weeks again where we will just continue to watch the wire as the news comes out. So
exactly.
So appreciate it, Scott Bauer, for helping us kick off our week, CEO of Prosper Trading Academy, and of course Rick Ducat for also helping us get a great technical read. Thank you both so much for being here. And coming up next, we're going to spotlight the conflict in the Middle East and the economic impact of rising oil prices. As of course, the longer this conflict continues. Trading 360 will be right back.
Well, eventually, It's about knowing what to do with your money once you get it. But yeah.
Sometimes
Okay.
You could have done better.
Yeah, let's get back to it. Interesting though. I will keep that in mind, and definitely with the war and all that, we could be shorting those.
Morning movers, be the
we
first
could be
to find out what's
shorting
shaping early
those
market action. Tech check,
markets.
options corner, futures focus, technical analysis, morning
Or these
movers
ETFs,
covers it
anything
all.
linked
Grab
to
your coffee and tune in every
defense
trading day,
and
8 a.m.
oil.
Eastern, only on Schwab Network.
And a couple. Yeah, there's a bunch of war affects
Whether
everything,
you're an
actually,
experienced investor
Interesting.
or just getting started,
Might be a move for later.
Charles Schwab offers a
We'll look
webcast
that
that's
we'll
right
look that
for
shit up
you.
during
The
platforms and tools
Might not
webcasts
be.
are
The
designed to
next
help
break
you
might be
broaden
coming
your
up
knowledge
sooner rather
of
than later. This
platform
coffee's
features
going
and
through me.
resources available
Oh,
from
too much
Schwab.
information. I
You'll
apologize.
learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest.
We're all adults and we're all up this early. You know, we could talk about
Head
the
over to
effects of coffee, right?
schwab.com/coaching and start learning
Or
today.
supposedly we should. No, we'll talk about it.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
When an investment advisor likes a client's positive review on social media.
Welcome back to Trading 360. I'm Jenny Horn, live in our Chicago headquarters. But it's time
adopted
now to
the
spotlight
content
the
and is
responsible
responsible for
East
its. Yep, that's crazy. I remember that one though,
economy.
which is dope.
Joining us now for more on this is Kieran
But yeah, you
Osborne,
can't
partner
just
and Chief
That's kind
Investment
of man.
Officer
That's
at
like
Mission Wealth.
that's
Thank you
crazy.
first
The
and foremost for
SEC is
joining
like
us
a
to kick
girlfriend
off
now.
this
He's like, why'd you
trading
like
week.
her
And as we
picture?
know, with the conflict in the Middle
Huh?
East pushing oil prices higher.
Why you liking bitches' pictures now?
What do you see as the
Huh?
real economic risk if this
You
drags
get
on
commission?
longer than, of course, the markets are expecting?
Or you give her advice?
Thanks for having me, by the way. Yeah, I think it's tough, isn't it?
That's
You know,
funny.
we're getting a lot of volatility dominated by
Corporation
the Middle
owns
East
35%
conflict, and
of the
yeah, we'll see how this the rest of the week pans out here. But you know, I think the market and the economy is really looking to how this unfolds over the near term. Hopefully, we get some de-escalation. Maybe over the weekend, some of the communication maybe escalation to de-escalate. We'll see if that transpires. But I think it's also important to point out that heading into this period of volatility, the U.S. economy was relatively strong and quite robust. In fact, what we had seen ahead of the conflict was economic data coming in ahead of expectations. We were seeing a pickup in business investment, capital markets activity.
I'd imagine 100. Why wouldn't it be anything
and really,
other than 100, right?
ongoing bottom line earnings growth across companies. So the economy is in good shape heading into this current period of volatility. To the extent that this Middle East conflict is prolonged and oil prices stay elevated, that may weigh on consumer spending, which really is the backbone of the U.S. economy. So that's what we're really focused
it's not like
on
I was
here.
reading that.
How long is this going to play out? Because that may have some bearing on consumer spending and then
Holy
ultimately
shit,
the economy.
triple
And
taxation.
the longer this plays
I'm
out,
glad we got this hint.
the larger the impact.
And obviously, I mean, there's so many that still do fully believe in the value of staying invested during these times of conflict. And so, as far as looking at history, what have we really learned from past events?
If you ever see this, I'm sorry. I understand the importance of taxes. Don't call me ignorant again.
Conflict like this.
I was in college and we got in a debate over taxes, and I really didn't like taxes. AC just called me a fucking moron pretty much and said, "You're ignorant fool. We need to pay taxes, or we can't drive on roads without having it be cobblestone and dirt."
Historically, and what we've seen and taking a very long term.
I didn't talk to him for like a year.
Communicating it with our clients is
but,
that the market, while geopolitics can cause near-term, short-term volatility, over the long term, the stock market tends to show
triple
taxation,
very good roads.
Really geopolitics that drives long-term performance. That can cause short-term noise and short-term volatility, which we're currently working our way through. But over the long term, what really drives markets is increases in innovation, productivity, and ultimately bottom line corporate earnings. And all of these factors, heading into the conflict, were intact. So
yeah, but how much? It says it
haul,
reduces the corporate tax burden on dividends received, but how much?
Maintaining
Here's
broad
the key concept. The
diversification with
percentage of the
respect to your
dividends
portfolio
a corporation
allocations
can
will
exclude
be
from its
rewarded over
taxable
time.
income depends
Okay, and you
on its
mentioned the key word that I'm also
ownership
going to use,
stake
diversification, which we
in
still
the
saw, hugely in
corporation
the first
that
quarter,
paid
like
the
small
dividend.
caps, international stocks,
There
emerging
are
markets. And
specific
so,
tiers
in
of
your opinion,
ownership
why did
that
some of those spaces
corresponds.
hold up,
Okay,
say,
less
better
than
than
25.
the mega cap tech
Less than
trade?
20. We have 25.
Yeah, I think, we've seen obviously the
25%
Max 7 has
to
been
less
driving the US
than 80.
market over recent years, and
The
until more
deduction
recently, really,
increases.
through the beginning of this
Corporation
year,
can
but towards the back
deduct
end of last year. And I think
50% of
there were a
dividends,
lot of concerns
but they have
around
less than
valuations,
so
which
it's over.
were quite
It's
frankly
over
quite
50.
stretched relative to other areas of the market.
80% or more.
As a case in
This
point,
typically applies
growth
to
has underperformed relative to
affiliated
value. A lot of
groups and allows
value-oriented
for the highest
stocks have
deduction.
done relatively well and are actually positive year to date, despite the broad market being negative. Small caps as well. They were relatively cheap versus the mega cap names heading into this year. And what we're seeing is I would say a squeezing or a reduction in the spread between
80%
earnings growth of
or
those
more
Mag 7
ownership.
mega
We only have 25.
mega tech
So
names
we're above
relative
50.
to the rest of the market, where the rest of the market is catching up.
So
And quite
65.
frankly, it's near on impossible
It said
for those large
over.
companies to stay the largest forever. It's just very,
It
very
said over.
difficult.
It
And then
said
looking
over
further
20,
abroad
but
into
under
international stocks,
80%. The deduction goes up. It didn't tell you how much.
They have continued that trend on a relative basis versus the US as well as emerging markets. Where looking abroad, those international
Retarded.
stocks
65,
are
80.
relatively cheap versus the
How
US,
many?
and they continue to be despite relative outperformance recently.
No, it
They
said
have about twice
80%.
the
It
dividend
goes
yield
to the
as well,
highest, so
and
it's not.
they may be supported by
100.
more friendly, I would say,
It could be
monetary and
65
fiscal
or 80.
policies that have come to the fore over recent
Said
time
significantly.
periods here, and moving forward, like
Fuck
Germany in
you guys.
particular,
That was
where
dumb.
they are increasingly spending at the
For
fiscal
corporate
level, should
shareholders, only
support not
between
only the
20%
German economy and German
and
stocks, but the broader Eurozone as
dividends
well.
received.
Okay, and despite some of the negative headlines, I think that the space of really private credit has become so interesting. But you actually make the
How
point
is
that the
anybody
outlook
supposed to?
has
Well,
improved,
now I
despite,
remember
again,
it.
some various headlines that would
Dividends
depict maybe a different
received
message. And so, what do you believe is really driving this latest confidence?
Yeah,
Alright, now
so
I
we
know it.
like private credit.
That was
It's
really
a high
annoying. First time I
conviction
saw it,
asset
though.
class of ours. In
So,
fact,
fine.
if you were speaking to diversification,
Those
private
are hard
credit is
ones.
positive year to date,
Pause.
despite some of the headlines surrounding the asset class. So it has done its job from
An
a
investment
diversification
advisor
standpoint
cannot
and from a
assign
total return driver in broadly diversified portfolios. We keep in close
without
contact with
talking
many
to the
in the
client.
industry across private credit, and the outlook has actually improved despite a lot of the media noise that's
Yeah, I
been
can't
focused
just
on the
drop you
asset
on
class.
somebody
We
else's
don't
doorstep without
believe
letting
that
you know.
private credit poses anywhere near a systemic risk. It just simply doesn't have the level of
You're
inherent
adopted now.
leverage within it, nor does it have the moral hazard issues with underlying lenders maintaining significant portions of their loans. What's happened now with the outlook for interest rates is likely we haven't spoken about the Fed, but the Fed is unlikely to maybe they cut rates one more time this year, but it's a tough job for them to try to cut rates given where the backdrop of Middle Eastern conflict plus elevated oil prices pushing up inflation. And so what that means for private credit is that base rates are likely to stay relatively elevated and around this current level. And then
neither no load nor low load.
Within private credit, all of which points to upward expectations on returns within the private credit space in the solid high single-digit range. So we like private credit a lot despite the noise surrounding it.
Okay, and last but not least, turning to the Fed, if policymakers are in this, say, wait-and-see mode, what data points do you feel matter the most over the next several months?
Yeah, I think, as you point out, the Fed is likely in wait-and-see mode given the economic backdrop. They want to see what transpires with the current Middle East conflict. They want to to see how long oil prices are likely to stay elevated, because that's going to have a significant impact on near-term inflation. And so I think, for lack of a better word, that the Fed is really in wait-and-see mode, sitting on their hands, looking for this economic data to come in, and before they make any significant move with respect to monetary policy. My view is they still view current levels of interest rates as somewhat tight. So they want to reduce interest rates over time back to a more long-term normal rate of, call it plus or minus 3%. So right now they do believe they have tighter monetary policy, and they want to move towards that 3% level over time. But I don't think they're going to make an adjustment until they see economic data coming through, until maybe we get some sort of resolution with respect to the current conflict. So again, I think we're in wait-and-see mode. And maybe the current pricing for the market is showing us that the Fed is unlikely to cut rates at all this year.
I imagine the earliest one.
But maybe if we get some sort of resolution with the Middle East, I think they're going to ear towards cutting interest rates moving forward. So maybe we get one interest rate cut maybe in the back end of this year.
Yeah, I think that markets and all of us are as well just really rooting for hopefully at least some resolution to that conflict, so we can stop going back and forth and just really going through some of the uncertainties, frankly, that still remain. But so appreciate your time today, helping us kick off the trading week here in Osborne, partner and chief investment officer at Mission Wealth. Now, coming up next, the disruptors. George Tillis will look at really Twilio after Jefferies did upgrade shares to a buy, also raising its price target. So he'll break down the call and give us an example trade next on Trading 360.
Yeah, they're paid last. They're paid last in there. Oh. Stocks are even after bonds. I think bonds are first, right? Or I think common stocks are the lowest of the low. Common stockholders have the residual claim and are paid last and after secured creditors, unsecured creditors, subordinated debt holders, and preferred stockholders. In many bankruptcies, common stockholders receive nothing because assets are exhausted. Damn. Chicken, no cookie. No crumbs from the cookie in it.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on
An
any
investor
device for
buys
free.
shares of a Japanese company.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks?
What is the
Our
approximate
technical
return in
analysis
dollar
webcast
terms?
series breaks down different
I've seen this one
techniques
before, and
like
I still
trend
don't.
analysis,
Okay.
price patterns, moving averages, oscillators, and much more. Best of all, you
What
can
is the
ask questions
approximate
directly
return
to
in
an
dollar
education
terms?
coach. It's interactive learning at its
It
finest.
increases
Tune in
in
live
but
or on demand.
yen.
Head over to schwab.com/coaching and start learning today.
So nonetheless, it goes down for dollar terms. So negative in dollar terms by how much?
We're back on Trading
Yen went
360
up
with a
8%.
developing story. Bloomberg is reporting that Elon Musk's SpaceX increased its target
12
IPO
months.
valuation
So
to more
4?
than $2 trillion.
Negative 4?
According to the report, the company and its advisors are floating the figure to possible investors in its IPO ahead of meetings in the coming weeks. Noting these talks would likely include more details that would support the higher valuation. But it's time now for the disruptors, and George Tillis is joining us, senior markets correspondent for the network, for today's company, which is Twilio. Twilio shares right now are up about 0.3%, following some news that Jefferies upgraded shares to a buy from hold, raising its price target to $160 from $125 a share. And so, George, walk us through really what's behind the thinking of this call.
Well, I think there are a few things going on with Twilio, which is really a sort of a legacy communications
It's when they're
management
earned, or
company.
when you did
Provide,
the work.
IP communications, call center support, and they're integrating agentic
Yeah,
AI
exam tip.
quite heavily
Accrual
in
equals
their
revenue
business.
when
And
earned.
if you look
There we
at
go. Cash is
things
revenue
like
when
dollar
received.
retention rate or net revenue retention
Yeah,
rates,
you
have
know
been
what I did.
improving.
You know what I did last summer.
Partnerships and even customers. For a partnership standpoint, they have Microsoft as a partner, Amazon. Customers
That was a
include
great
Netflix,
reference.
Salesforce, Airbnb. So they have
Not to, well,
major players
not to toot my own horn,
that are
you know,
supporting
but
their business. And if
I don't
you
think
look at the
anybody else
AI-led
is.
messaging,
An
secular
investor
tailwinds,
purchasing
looking at
benefited
Jeffries' call, they
over
actually see this very
out
positive in terms of
out the
market share
money.
gains.
I said
But
over
the
the counter
valuation
for a second.
also may be compelling as well. So they upgraded the stock to basically a buy from hold. And their price target is quite high at $160 versus the
Thinly traded.
125
It's not going to be
prior.
very
They
volatile.
see that Twilio is gaining market share
Liquidy.
in the agentic AI
Oh.
space. They see the secular tailwinds as being supportive of the top and bottom lines for the business, and they also see a better valuation metrics going forward. And one of the things I noticed about
Thinly
Twilio,
traded.
with a market cap at around 19 billion and sales about 5.1 billion. In the last 4 quarters, they have become adjusted profitable. The first time in at least the last 10 years where I have my records going back.
So the price is going to be relatively
33%, and free
consistent,
cash flow was up by
stable.
44%. Story also matches the secular tailwinds associated with agentic AI in their
could go up
communications
and
interface
down.
technologies. And
Currency
the other thing is their $2.5 billion in cash has been very supportive. Along
The
with that
price
free
could
cash
stay
flow,
the same, but the currency, the dollar could go up and down.
Dollar share buyback. So there's a lot of positive business catalysts.
Thinly traded, low volume, yeah.
And the earnings themselves
So then,
estimated for next year around $6.39.
How does that of the money?
At around 20 times next year's earnings. So I think the valuation looks compelling as well, according to what Jeffrey says, to match again the market share gains and the financial statement analysis. At least in the last year, are improving.
Okay, and I think it's really interesting you call out the last year and again the overall improvement as far as like consistency, profitability. And then you zoom out though, and you see that this name,
it is over there.
traded as
Wait,
high as
what's OTC?
$457 a share. And so when you think through trading this name, of course, for example purposes, do you think more in the near term, just based off again the last year of its financial profile, or do you tend to look at the entire picture and say, hey, we've come off of those highs, right? I mean, almost 70%.
Substantially affect.
Yeah, so it's a great point. I mean, you look at the stock, like you said, Jenny, over the last 5 years, it's gone through a basing pattern, and it seems to be, at the very least, starting to move out of that basing pattern. Again, because the financials are improving, and then also the business itself, in terms of technology adoption, is improving.
Whatever. Exam tip. Low volume equals
unfortunately, because there's value, there isn't a lot of momentum. With volatility also very high, with the VIX around 25, I'm selling premium. And that's essentially the strategy I've taken on in the past 6 weeks or so with the volatility inflating.
Which
and so if you look at the Twilio, recently it reclaimed the 200-day gap. So I'm going to use that as a
American
benchmark or a
depository
shelf for structuring a premium collection strategy or selling a put for May. And so I'm going to use the May expiration, selling the 120 put cash secured, and you can harvest around $6
ADRs
a
represent
share
ownership
or $600
in foreign
of
company
contracting
shares
credit.
held
So
by
the whole
a
premise behind the
depository
trade is
bank.
maintenance of the 120 level, because that $6 premium between now and expiration of the 3rd week of May will
Stop
erode to
with the
zero.
beta of
And that's about a 5% yield to strike price until about 6 weeks from now when the contract expires. If you do structure this trade, you have to be willing and able to take ownership of the stock at 120, but your cost basis is $114. So you basically have about, $17 of room to break even on this trade. So if it holds the level of 120 or higher, that premium will slowly erode to zero, and that's the objective of the trade, because the premiums right now are quite expensive because of the high implied volatility built into the put options.
I got bit by a
I think a good way to frame it, and a good way to obviously think through trading Twilio here for, again, example purposes, but appreciate it,
living
George
up to the hype.
for all of that breakdown. Now,
bothersome.
coming up next, it's time for our 360 round, and we'll be focused on the volatility around gold as it bounces back from recent lows. Trading 360 will be right back.
Gold's always going to be there. It's awesome. I wonder if silver finally settled. Under regulation, the private placement rules. How many accredited investors may participate
unlocking
in
the power of
offering?
Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms
Maximum
to
of
your unique
35.
needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
Regulation D allows unlimited accredited investors to participate in the private placement. The limit of applies only to non-accredited, sophisticated.
Where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer,
Exam
we focus
tip.
on what's
Reg
driving
D
investor
unlimited
sentiment right now.
accredited
Clear
investors
analysis
max
and
of
forward-looking
non-accredited.
market coverage every
Max
trading
of
day.
35.
This is
Non.
a make or break level for this stock.
Alright.
And that could certainly be a short to near-term catalyst.
Next gen investing.
Alright, the Series 7
Only on Schwab
exam
Network.
allows a registered representative to.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before
I
there
believe
were
it's
branches in the area.
virtually all
He really
types of
started with nothing.
securities.
He worked hard, and after he passed away,
Was
the
with
torch
the
has been
guru.
passed to me.
Fuck,
And
4
my
times.
advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations.
I think it's so
Someday
virtually
it'll be their
everything.
turn.
This is Fast Market, built for
Yeah.
traders who want more
The
than
Series
just
7
headlines.
is
We
the
walk you
broadest
through trade ideas with structure,
representative
risk management,
license,
and a focus
allowing
on
the sale of
execution.
virtually
From
all types of
options
securities,
to earnings
including
to
stocks,
volatility
bonds,
plays.
options,
We bring
mutual
decades
funds,
of
and
trading experience
variable
to every
contracts. The
With
Series
real-time
6
insight across
is limited
products
to
and sectors, we
investment
deliver what
company
active traders
products
need to stay
and
ahead. Fast Market weekdays
variable
at
contracts.
noon Eastern, live on Schwab Network at schwabnetwork.com.
And we're like the 65, but it's even lower. I think it's just stocks,
Welcome back to
bonds,
Trading
and options.
360. I'm Jenny Horn, and it's now time for the 360 round. And for that, let's bring in our panel to discuss the recent trends we've seen in
Uniform
gold.
Securities Act
Joining us
is
now
a-
is Derek McPherson,
is a
CEO of
model
West
law
Point Gold, and Max
created.
Baker, president of American Hartford Gold. So, Derek, we'll start off with you here. Walk us through your broad thoughts on gold's price action since the war began, and really what this is signaling about risk and overall confidence in this market right now.
Yeah, I think it's interesting. A lot of people have pushed back on the gold price because it went down when you had this sort of significant geopolitical event. But the reality is risk premiums came out of the market across the board, and lots of people had profits in gold. And I think as you saw,
NASA
investors
created
deleverage.
the
Gold
Uniform
is one of those places
Securities
where they took
Act as a
profit. And
model law
I
that
think that's what we've seen
states
over the last sort of
can adopt
6 weeks. I think we
to
found a level
bring
here around
consistency
4,500 or 4,600. And I think that's
to
where
state securities
we're set
regulation.
to go from.
Individual states may
My big thing is
adopt
the underlying
it
fundamentals
in
that have sort of
whole
pushed gold to these
or in
levels
part.
haven't really changed.
And that's a very good point. And Max, now to shift to you, you've also said that gold is resetting after an
Primary
overheated
difference
run.
between the
How do you
security market
distinguish
line
a
and the
healthy
capital
reset
market
from,
line
say, the
is
start of a
the
deeper
security
breakdown?
market line.
Yeah, I'm right in line with what Derek was saying. I see this as a big
Beta as the
opportunity,
risk
and we've had a lot of
measure
investors
starts at the
that were
market
kind of
return.
worried about
Only
getting into gold at
plot-sufficient
5,500,
portfolios
5,400, and
uses
now it's at a
standard
level we found
deviation as
a
the risk
bottom.
measure.
I'm actually more bullish than ever on gold with this pullback.
It's usually beta.
We've got inflation on deck.
When they
Obviously,
put beta in
the
there, it's
geopolitics
usually
of things are heating up
beta.
more than ever. Central bank buying has not slowed. Everything's in place for gold to go significantly higher. That's why you're seeing the big banks, UBS, JP Morgan, Wells Fargo, all calling for $6,200 to $6,300 gold by the end of this year. That's a 40%
SML
move.
uses beta systematic
I'm right
risk
in
as
line
a
there.
risk measure
Okay,
and
and I
can
like that. More
plot any
bullish than ever. That is a
security
take
or
I love to hear, especially with all the volatility in
or
this market.
portfolio.
And so, Derek, there have, of course,
The
been forces
CML
building
uses
behind the price
standard
of gold for
deviation
years.
total
But
risk
in your
as
opinion,
only
what matters the
and
most when
only
you consider
plots
government
efficient
spending,
portfolios.
geopolitics, declining trust in the U.S. dollar? I mean, what right now
That's
do you
good to
think
know. The
is one of the most
CML
important
uses
factors?
standard total
Probably
risk
all of those.
and can
But I
only
think
plot efficient portfolios.
the big thing is a big thing is the declining trust in the U.S. dollar.
So
I
those are
think
the
what
good
we've
ones.
seen in the movement of the
CML
gold
for
price
good ones.
is generally been central bank and sovereign
Under the
wealth fund
Uniform
buying to diversify
Securities
away
Act,
from the
which
U.S.
is the
dollar.
following as
Those are
no
massive buyers. They
net
move very
capital
slowly,
or
and they
net
provided a
worth
steady bid under the gold price for
requirement.
almost 3 years now. And so I think that's what is going to keep it going. I think that government spending
We
and
just said that
inflation, as Max
35
mentioned. I think
thou
those are
if you
things
do
that
have
are going
custody.
to kind of play into this and add fuel to the fire, if you will. But those underlying steady buyers are still there, and they're not going anywhere. And the recent geopolitical events aren't going to change that factor either.
Okay, Max, similar question to you, of course, with gold being pulled between the geopolitical support and headwinds from real rates and the dollar. What force do you see as winning right now?
I think we're at a point, we talked about finding a bottom. Obviously the Federal Reserve has played a part, with oil going higher.
Fuck.
There's concern that rate cuts may be on hold. I think we're in a scenario right now where if oil continues to hold in the 110s or go higher, a recession may be on deck. And with that happening, rates will come down. Or if oil goes back down to 70, then rate cuts are back on the table. So either way, either path you take, you're going to get lower rates, you're going to get a lower dollar, and you're going to get higher gold.
Okay, and so Derek, investors who already own equities and bonds, how should they think through now gold's role in a portfolio during times like this one?
Acronym.
Smarter people
for systematic risk includes all of the following
except about half of that should be in physical bullion in some form, and then the other half should be in gold equities. I think that's a great way to look at it. I mean, probably I haven't looked at the allocations recently, but generally speaking, broad allocations are probably less than 1%.
It's not purchasing power; they would call it inflation.
As people start to add that to their portfolio, forget about the 10% that I just mentioned. It's going to be very bullish, and so you want to be kind of ahead of the curve as this as people start to add gold to their portfolios as a key diversifying feature.
Yeah, and I think a good point there. And Max, last but not least,
Prime
really quickly, want to get your thoughts on the macro shifts. What do you see is mattering the most right now to gold pricing?
As we discussed, the central bank buying has propped up the price, and as long as our government spending is a runaway freight train, as long as we're printing money the way that we are, you're going to see that central bank buying continuing its pace. And again, that's why you've seen every major bank calling for gold to be significantly higher from here. The writing is on the wall with fiat currency and with our debt problems globally.
Okay, well, so appreciate both of your time today, Max Baker, American Hartford Gold, and Derek McPherson, West Point Gold. Really great conversation around the precious metal. Thank you so much for joining us on Trading 360 for this Monday. I'm Jenny Horn, and that'll do it for us today. We have Fast Market coming up next.
I do want to keep these short just because I don't want to do like crazy 4-hour, 9-hour things. I like to do 2,
Schwab
or
Bank
whatever.
Investor Checking.
So I think I'm going to take an actual official break, but then I will hop back on live.
7 years in a row. With Investor Checking, you
keep
get
pumping
the
through.
award-winning features of our checking account.
Yeah, we're gonna
Cash
start
management
eating up a lot of the
all designed for
a lot more
investors
hours
like
in
you,
the
with
morning.
unlimited ATM fee
Okay,
rebates for cash
we'll be back in
withdrawals worldwide. No
8
overdraft fees and enhanced
Alright.
security features to keep your money safe. Also, because your investor checking